Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the Forex market. Today we start from the euro, but just a couple of words on the euro because mostly everything we said yesterday. And today we'll take a look also on Australian dollar because there we have the short-term, setup that might be attractive for trading, especially on the coming retail sales report. So here on the euro currency, but actually not only on the euro, other dollar rivals, Great British Pound and gold market as well. So we see the bullish sentiment. This market is really showing some pressure and power to keep going higher. So with this recent performance and how market reacts on the overbought area, shows really looks strong, and it seems that indeed market has the serious mood to keep going higher. So, but at the same time, currently it mostly depends on the statistics. So with the inflation, that shows the same numbers as the month ago. So it, at least at the current moment, it seems that Fed was right in terms of the inflation, that it is peaking currently, and it's probably reached the peak at this moment and ready to go lower, but we have some doubts about this. This is a bit different and wide topic to discuss, what we usually do in our weekly reports. But at this moment, the traders watching for a balance. And what balance is? Inflation, which should not be higher, preferably if it will be at the same level or slightly lower, and performance on the economy. It should not become weaker. So if we'll get the good retail sales, that's once again might support dollar rivals. Why? Because in recent time, it's really big amount of tightening of the Fed policy was priced in the current level of the dollar. And if, based on the statistics that we will get, we will see no necessity for the Fed to become even more hawkish and to more aggressive with the rate change, so we see some relief in inflation with the more or less support, positive dynamic in the economy. It just tells you that Fed should not act too aggressively. It should be a bit more smooth action. Maybe even traders will price out the March rate change and will postpone it on the first rate change in June. So this is the reasons why currently market reacts positively on any good sign in the statistics, in the same inflation, with some dropping of the inflation, and more or less positive dynamic in retail sales. That's actually what we'll be watching for. But in longer term, once market will find this balance of the fair value of the United States dollar in relation to the current overall level of the inflation and economy conditions, this retracement probably will stop. So this is currently some play out of the maybe too aggressive pricing in of the dollar value. Some trying to price out some part of the running into the quality rather than the safety, when markets were carrying with the Omicron spreading, with the Fed tightening, with inflation rising, and so on. They were pricing in some value for a dollar. It's currently some relief. So, but we still think that this is mostly a retracement type of action, although, it might be more extended based on this type of action that we initially discussed in our weekly reports. So currently, definitely, background stands bullish on the euro currency, on other markets as well. But currently, we feel uncomfortable for taking a new position. It's just because market stands around resistance and strongly overbought in the daily chart. We need some more or less reasonable retracement. As we said, it might be somewhere to the retesting of these previous tops in the 114 area, maybe slightly lower. That makes us more comfortable for considering taking any new long position. The same story you could see on, for example, on the cable, where we have a nice thrusting upward action. Market stands also near the overbought, and here one of the stops that you could keep an eye on, for example, the bread and butter buy. If somehow will be some moderate retracement within a couple of sessions, 30% pullback, for instance, this could be considered for taking the long position. So now let's take a look at the Australian dollar. Here is actually a very interesting pattern that has been formed. Actually, we were watching for this shape of the price for a considerable period of time, so approximately around a few weeks. And now if you take a look at the daily chart, you will see interesting features. So first of all, you can see once market starting the pullback here, it hasn't quite reached the OP target. Initially that has happened a couple of weeks ago, so here as you can see drop has happened, but now with this recent acceleration and moving other markets to the local tops, you could see that the Australian dollar also has completed the OP. So this pattern that initially were forming this A, B, C, D, C bottom OP, now target has been completed. All this stuff has happened near the major resistance 73.41, and again as other markets at the daily overbought. But that's not all yet. So you can see also that the upward action is taking the shape of the free drive pattern. I just delete the extensions just to keep chart clear, but if you plot the extensions here, you'll see very accurate combination where second stands at the 127 on the first, third stands at the crossing of the 1618 from the first and 127 from the second. So this is perfect shape of the free drive sell pattern. Potentially, free drive suggests the taking out of these lows. That's as the theory tells. Usually the target of the free drive at the bottom between the second and third drive. So we will see what will happen. On the hourly chart, currently, I do not see yet any patterns have been formed, but market is forming something that looks like the hand and shoulders. Here we see minor bearish reversal swing, so downside swing a bit greater than this upward swing, recent upward swing, and shows in a minor retracement. So if this setup interesting to you, or you just thought about the short of the Australian dollar, this is the one that you could consider. It's kind of the hand shoulders or something of that sort is forming here. And stop placement probably, it should be enough if you place it just above this area, because all targets have been reached. Your stop will be above the major 618 resistance, above the daily overbought. Hardly it will be triggered occasionally. So if market goes down, it should go right from here. If not, if market will start challenging the top, it means that the pattern probably fails and the market is ready to go up. So because all targets already stands in place, they have been touched, and market has no actually necessity to show the wash rinse or something of that sort, because there are no other targets stand slightly above this area. So that's what we have on the Australian dollar. It's the last thing that I would like to take a look at, whether we will have any divergences on the 4 time frame chart. Here we do not have it. Well, probably not. So can't speak about the divergences here. So anyway, the stop that we considered here makes sense to think about it. At least this is rather bright stop with clear patterns, and maybe somebody find it useful. So that's what we have today on the Forex markets. Let's keep watching what we will get on the retail sales report and see what reaction will follow.